investors are extremely bearish. And this is a chart of extreme bearishness from individual investors. Institutional investors are also very bearish, holding more cash and being less fully invested than just about any time in recent history. Why is that? Well, look, the wall of worry, the things to be worried about is very high and steep. To go through these just very quickly, we have inflation that's higher, it's lasted for longer, that's made the Fed even more hawkish, that's introduced more risk of a deep and more protracted recession than otherwise we would experience. I should add to that in that point that another risk, and Dan Ferris alluded to this as well as others, is fear of a sovereign issue where perhaps Bank of Japan or someone just goes a little bit too far in protecting their own economy and Bank of England as well. All the while, we have a global energy crisis brought about in part by the ongoing war in Russia and Ukraine. And then let's not even get started about some of the concerns about China. Now, there is good news about this slide. Let's look at the other side of this, and that is that the market, Scott Garlis, head of Newswire, likes to tell you guys the market hates uncertainty, but what it loves is when things go from bad to less bad. And I think you can make the case that just about each of these, with the exception of the China one, which I'm not sure about yet, is either going in a position to potentially go from bad to less bad, or at least have a little more certainty. So that is a positive argument you can make for the market, but make no mistake.